Welcome to this episode. The information presented here is for educational and informational purposes only and reflects opinions based on publicly available data. It is not investment advice. You should always conduct your own research and make decisions based on your personal financial situation, risk tolerance, and future expectations before buying or selling any U.S. stocks. Today we will focus exclusively on recent activity and views within the U.S. stock market, explaining which stocks were sold, which were added, and the reasoning behind these moves, while keeping the discussion centered on valuation, fundamentals, and future expectations. Starting with the sales, two positions were exited: Dutch Bros and AppLovin. Dutch Bros remains a solid company with long-term growth potential. However, its valuation became the main concern. The stock reached a price-to-earnings ratio of around 100, which is currently considered very high when compared to both its sector and the future earnings potential of alternative opportunities in the market. While this valuation was once acceptable during earlier growth phases, it now represents an unfavorable risk-reward balance. For this reason, the position was closed at a 4% loss. AppLovin was sold after achieving an 85% gain. The decision was driven by portfolio balance considerations. Exposure to software companies increased significantly, especially in areas that could face disruption from artificial intelligence over time. To reduce this concentration risk and shift toward areas less likely to be negatively impacted by AI in the near future, the position in AppLovin was exited while locking in substantial profits. Moving to the additions, several companies were increased or added based on fundamentals, valuation, and future expectations. Amazon was one of the companies added after a noticeable dip. The primary concern often raised by investors around Amazon is its high capital expenditure. Market sentiment toward CapEx tends to fluctuate depending on broader market conditions. When markets are strong, higher CapEx is often viewed negatively in the short term. However, over the medium to long term, CapEx represents investment in competitiveness and future growth. Recent shifts in market commentary, especially around AI investments, highlight how quickly narratives change. The focus here remains on Amazon's stock price relative to current and future earnings potential and the size of the opportunity ahead, which justified increasing exposure. Microsoft was also added. The stock remains down roughly 11% relative to earlier levels and is widely regarded as one of the strongest large-cap companies. Its price-to-earnings ratio stands around 28, a level not seen in years. Current market concerns around software and AI-related uncertainty appear to be short-term, as the company continues to report strong numbers and solid guidance. No deterioration in fundamentals has been observed, supporting a constructive outlook. Palantir was another addition. While often categorized as a software company, Palantir operates in a highly specialized area focused on defense, intelligence, and government-related data analysis. The nature of its software, the complexity of its data requirements, and the restricted access to government data create significant barriers to entry. These factors currently leave Palantir without direct competitors. Strong reported numbers, positive future expectations, and the stock's volatility created an attractive opportunity, with additional shares added around the 144 level. CrowdStrike was also increased. As a cybersecurity company, it stands to benefit from the expansion of AI rather than suffer from it. Cybersecurity is unlikely to be negatively impacted by AI in the short term, and CrowdStrike already integrates its solutions with many SaaS and AI-driven companies. While hardware companies are the first major beneficiaries of the AI cycle, cybersecurity firms are expected to follow closely. Both technical and fundamental factors supported adding to this position. Zscaler was added as well, further increasing exposure to the cybersecurity sector, which is expected to play a critical role as AI adoption continues to grow across industries. In addition to these changes, capital was allocated to a diversified large-cap portfolio, with equal additions to Visa, Google, Meta, Amazon, and Microsoft, all maintaining a focus on established companies with strong fundamentals and long-term growth prospects. That concludes the overview of the recent activity and perspectives within the U.S. stock market. If you want to stay up to date with the latest market insights, company analyses, and future updates, make sure to subscribe to the channel so you don't miss any upcoming content.